I'm currently putting away about 26% of my income to retirement.
Wow, overachiever. Going
know.
over 25 and throwing 1 on there just for good measure.
And our mortgage is $165,000 and at 7.5%.
Yep.
We've been putting an extra amount per month, so about $200K toward the mortgage.
2K.
Or yeah, sorry, 2K. I just read it wrong. Woo! No, not 200K. Wow. They've been putting 2K per month towards the mortgage. Is this correct? Is his question.
So here's what's beautiful. In our opinion, once you get to 25% savings rate, you very rapidly move away from your financial decisions being correct or incorrect. It becomes personal preference at that point. It's one of the things we say that after you get to 25%, assuming you've done all the things you're supposed to do and you followed the financial... Brian, do you have a thing? Can you have a thing up? And you followed the...
Hang on. And
oh
my God, it's not there.
Oh my
The
gosh,
whole show
I have
is
it.
coming to a screeching halt.
Over here. I didn't know why that was on my desk. I was like, oh, I have one too.
And you followed the financial order of operations, then once you get past the 25% savings rate, you get to pick and choose what you want to do with your dollars. Now, here are kind of the two sides of the coin that I would encourage you to think through, Joe. Like, obviously, your mortgage is at 7.5%, and that's a higher interest rate than we've seen historically. I don't know your age. I don't think Joe told us how old he was. Did he?
Look at our
He did not.
age? Question mark?
Age. So one of the things I'll think about, I'm just going to say, let's say, Joe, you're a younger person below the age of 45. Here's one of the things I would think through. Man, okay, I could take this $2,000 and I could apply it against my mortgage and I could pay down that 7.5% interest. Or there's a really good chance that if interest rates continue to fall over the coming months or years, I may be able to refinance that mortgage. And if I'm able to refinance that mortgage at some point to 6, 5.5%, 5%, will I be just as happy that I prepaid my mortgage with that extra $2,000 a month? Or might I have been better off, or might I have been more excited if I took that $2,000 and I began just dumping it into an after-tax brokerage account and buying a low-cost index fund and letting those dollars roll? Because if I do that, odds are in the future, I'm still going to have the ability where if I want to pay off my mortgage prematurely, I can just take some money out of the brokerage account, write a check, and satisfy the mortgage. I think that's probably some of the things that Joe should think through.
Based upon because the mortgage amount was pretty low compared to
$165,000.
Here's the thing, Bo's spot on. Once you're saving 25%, I'm not going to fight you. You know, you're doing the discipline thing. You know, the big part of when we bring age into the discussion is there's really 3 phases of wealth building. There's the make wealth phase, there's the maintain wealth phase, and then there's the multiply. That's when you get to think about legacy and all kind of other great things. I always pick on my debt crusaders. We even had on Making a Millionaire, we had Patrick and Megan who were on our premiere show, and they were debt crusaders. If you look at their history. And look, you can be a debt crusader and still come out on the other side and be extremely successful. Because you're just so disciplined, not only with paying off the debt, but also saving for the future. And that's one of the things when we've interviewed other content creators, or I've been on other content creator shows who I know are debt crusaders or have a history of paying off their mortgages quick. I'm very quick to ask them, hey, say, I know you paid off your mortgage really quick, but were you also saving and investing in your 401k and probably saving 20 to 25% of your income? And everyone that has come out on the other side being successful, I found out they were doing both, and they got them to admit to it. And I think if you even look at Megan and Patrick, who are on our show, they even would admit that. So I don't have a problem, Joe, if you want to pay it down because you're doing the things that will make the wealth. It's just I don't like the people that I find out that are doing maintain wealth behaviors, and paying off a mortgage is definitely a maintain wealth because you're de-risking supposedly in the long term. But I always say don't think you're de-risking by paying off this debt if you haven't taken away the risk that you'll never make the wealth. Because I see so many people in their 20s and 30s.
They're 32 and 34, by the way. That just came in.
I mean, that is young. It's not necessarily maximizing, but I completely get it. There's nothing wrong, especially at 7.5%. I'd probably, look, I have a no hypocrisy policy, and I'm very much the one that Bo picks on me, but I still round up every one of my payments, even though I'm on a 2.5% mortgage with like $64,000. I just can't pay it off, but I am rounding up what I pay off because it just feels like, why not? You know, let's get this debt extinguished a little bit faster.